Do we have music going? Yeah. Okay, cool.
Welcome everyone to Price Action Live for Thursday, July 24th here at Traders Post. We are going to be live trading. That's right. That's what PAL is all about. Us putting our cards on the table, eating our own dog food, as Mike likes to remind us, to show how we can use Traders Post in order to trade live capital. Well, in this case, we're going to be doing prop firm accounts, right? So these are prop firm accounts that we have set up because a huge portion of our audience are all about the prop firm life. If you guys have any prop firm accounts that you are trading, you can trade with us. You can be in the chat. You can do what we're doing. We could shoot the breeze and see what this is all about. Guys, how has it been over the last couple of weeks? I know we haven't been back here since last week.
It's been good. Yeah, it's been an interesting week. I kind of took a few days, quote unquote, off. I was supposed to head to California, but I ended up that trip got postponed. So instead, I took Monday to catch up on some things for Traders Post. Traded the morning session. Did well. I did okay Monday. I think my overall profit on the average account was $95. So at least I basically broke even. It was initially a loser day. I think I was down $500. And then was able to reclaim it back and make 95. Made almost 700 on Tuesday, and then I had a really good day yesterday, making 1,000 on all accounts. So it's been a good week overall. So I was quietly trading while taking a few days away from the desk there.
What about you, Trevor? How has your trading life been?
I was also on vacation. We happened to time it at the same time, unbeknownst to each other. I went to Nashville with my wife to see Coldplay, which was just coincidental for all the stuff that happened with Coldplay. We did not get caught on the big screen, so
on the Jumbotron. Dang,
Jumbotron.
That's what I was hoping for.
I was saying the funny thing is that part of the show is like the last 1 minute of the show, so it's super unfortunate that happened to them. But no, I wasn't trading. I've been sort of taking a break from Top Step for at least the next week, and I've just been watching my long-term holdings. I have a leap, 2-year out leap for Google and Amazon. Pretty much, it's like my only real positions in 100 shares in FBL, which is like the Meta 2X, ETF.
Got it. So just mixing up some of the equities and options side of things. You were doing some prop firm trading there for a little while, right? Are you still managing some prop accounts with TopStep?
I was. I kind of I hit the 10 evals for the month like early in July and sort of forced myself to blow them. But I was like, you know what? If this happens, it wouldn't be a bad idea to take a 2-week hiatus from TopStep. So I've been kind of that meme of, let me in, just
got it,
waiting. But no, no prop trading for me.
Okay, so we're right at the bell here. Let's take a look at what's going on with NQ right away. It's been an interesting sort of range between the 23,400 level and this 23,120 level or 23,150 level, whichever you want to call it. Obviously, when I look at support and resistance, I look at ranges of price or bands of price. So I'm never pegged to one exact price. It's usually just around that area. The trading activity this week was really kind of built on this range as well. Like yesterday's mean reversion trade was really around the sell-off in the morning and then buying the dip in the afternoon and holding that for the rest of the session. So that was a good trading day. I'd like to see if we do something similar here, but at this point, we're looking like on the 2-hour chart, we bounced off of this shorter term EMA. We're sort of testing the resistance of this anchored VWAP. And of course, our main resistance is 23,400. So I'm very curious how we're going to open up here. I'm going to keep an eye on VWAP, of course. And what I'll probably do is start preparing a short position, assuming that that's the resistance area that will hold up. It's been interesting. It feels like for several weeks now, we open with a sell-off and then close with a rally. So I've been kind of prepared to go short every morning, but anything can happen, obviously.
We have continuous jobless claims this morning at 8:30. Came in at 1955 when we were expecting, the forecast was 1960 and the previous was 1951. So this is one of those numbers where it's the trend over time that matters. Mm-hmm. And so this is like not particularly good that we're having this steady flow of continuing jobless claims that are happening, because you have to imagine that before those claims happen, you have, especially for white collar sectors, severance period. So it could be weeks to months before they actually report they have to file for jobless claims, and then and that usually means that there's more in the pipeline coming, and that we haven't actually flowed out of that. So it's a little nerve-wracking. It's not some crazy high number, right? We're used to seeing like 1,800 or 2,000 more during the COVID era. So it's down from there, but it does mean that there's a softening potentially within the economy.
Well, I was at least happy to see that for today's report, the initial jobless claims were slightly down from forecast. But yeah, to your point, a lot of the stuff is lagging and can be revised. All right, a few minutes into the open here, and it's looking like we're still posting below VWAP. I think I'm going to open a short here and just watch to see how we form.
Just to note, we in 11 minutes we have the S&P Global Manufacturing PMI.
Yeah, I'm not too worried about that report.
Sorry?
That's sort of a low impact report from what I can
exactly. Yeah, so it's the ISM one that usually moves the markets, but the S&P one is generally faded. Hi, Ventura Trader. Thanks for joining. Always love to have you here. My woes for my Bitcoin prop firm trading is terrible. Just about blew out the account. Have to start again.
Sorry to hear that, Tom.
I just not paying attention to the. I'm so used to in leverage plays to just be able to add in, like, the drawdowns are not nearly as important. But,
yeah, I can kind of do that. I mean, and there's many firms, at least in futures, that will allow you to dollar cost average, or DCA, where you can average into your position. I'm doing that here, obviously, with the way that I build my shorts to keep my risk tight. I only ever start with 2 contracts M&Q and watch where my initial trade goes. So I'm ready to dump this trade with only, maybe $100 or $150 in loss. And then I add to that trade as price continues. You can do mean reversion trades, though, where you start with your initial position. You do expect the price could continue against you, but that's where you want to average in. It's just you're up against that daily loss limit. So you just got to keep that size pretty small in order to pull that off.
How have you found the trading? Oh, sorry.
Sorry, go ahead.
Oh, nothing. I was just gonna say, how have you found the trading at the highs to have been? I feel like it's been relatively straightforward, I guess, but then these moments of just rips and dips, I feel like it's very Twilight Zone-esque, like in the last.
Yeah, it's interesting. Everybody was saying that yesterday's bull reversal caught them off guard, and this candle here definitely was crazy at 10:54 a.m. Central Time. That one caught me off guard as well, but I was already long. By the time we had reversed and posted above VWAP, I pulled out of my short and went long, and so this candle was just a happy accident that put me well into the positive. I saw it went way outside of my linear regression channel, so I ended up taking profits right when it started to pull back here, because it was such a bearish candle and bearish reversal that I figured that was the end of the move.
How much are you finding that the volume sized candles are like a staple now for you? Like, would you ever trade without them?
I'm getting to a point now where I don't even want volume on the chart. I don't even need it anymore. I love the volume-based candles. I never thought that I would see a new type of indicator like this that actually was as helpful as this is, but it ends up being super helpful.
You know what? I think I'll switch to that for a while. Because I turn that on, and then I'm seeing on the chart, like, where I took some trades where obviously now I wouldn't. So
it spells out so much. And obviously ATR and the volume-based candles are really important to me. Linear regression trends are really important. VWAP is really important. So when you kind of mix all 4 of those together, you've incorporated all the data that matters at the end of the day anyway. It's price, open, high, low, close, and volume. And then, of course, everything after that is derivatives of price. So volatility, where have things moved on some short-term or long-term basis. Oh, thanks. Peter in the background here has reminded me to increase my font size. For those who don't know, I actually like to pull the font size back on TradingView. I feel like the default font size is just like, I'm not blind, I don't need it this large. So happy to make it smaller. It fits my screen better, but sorry about that. I'll make it a little bit larger first for the stream here, because I know my screen in general is small for a lot of the people watching here.
Altcoin markets are starting to like really bubble up. The sentiment is becoming a little bit more ebullient. We're not at the point where generally my rule of thumb is when we get to all-time highs for in the crypto market for any asset, you are if you're not double topping, you're about 50% or 60% of the way through the move. And so if we do start hitting all-time highs, I think XRP hit our all-time highs at 317, 318. We have Dogecoin rising. Solana even perked up, and obviously my boy Cardano starting to move. And Ethereum, it's just like the dogs are barking, and it really makes me think. Like when I take a look at the social and political and economic feeling of the markets of the U.S., you think to yourself, well, like there's so much bad news and uncertainty and volatility priced in, but when you see stuff like all-time highs coming in all kinds of different assets, you sort of get reminded of like you ever look at a chart of like the S&P and Nasdaq over like 40-year time frame, and you go, all the stuff that people were worried about never stopped this from going to all-time highs, all-time highs, all-time highs, all-time highs.
That's true. I think one of my favorite reports is the back test that they did that bought every top of the S&P 500 for the last 100 years. And even if you bought the top, you still averaged around 7% per year. So yeah, drawdowns, volatility, none of this really matters for long-term holding, which is why it's such an interesting thing to be both a long-term investor and an intraday trader, because you would think that me going short the market right now means I have some kind of counterintuitive thesis, but nothing could be farther from the truth. I have a 5-minute short thesis, maybe 15-minute short thesis. I expect that price will pull back over a short period of time, and over the long run, I expect that prices go up and to the right, and they always will. Companies will always post a profit. Earnings will always go up, even in hard times and in good times. The American economy is a beautiful thing. So I'm going to hold the U.S. market as long as possible for my entire investing career. But day trading is a whole different animal. I really kind of treat this more like I don't know. I used to joke with my kids that it was dad's video game. You know, they were playing their own little video games on their phones, and like, this is my video game. So I'd get alerts. This is real. Yeah, this is dad's video game. I get a little alert or chime on, price breaking or something, and I'd trade a crypto position or something. Like, dad's playing his video game.
There's this YouTube video. I can't remember what his YouTube name is, but the title of the video is "Leaps Are the Future." Kind of a funny play on words, but I remember watching it probably 4 years ago. And it's kind of like the 4-hour work week, where there are truths in it, and there are other things where it's like, well, if you bought a leap prior to like a 10-year sideways market, it doesn't win all the time. But maybe the market now is different and designed to overall go up. But Sanzi, my buddy, and I have always joked that like when we were doing our long-term swings, that having a prop account would have been a huge difference maker, and not feeling like so hands tied when you're like, oh my God, I'm long on these 2-year out leaps that were $6,000 a piece. I can't do anything, or what am I doing right now? It would have been nice to trade the opposite way, or trade more intraday on prop accounts. So I think overall, like, obviously you want to not buy the top. So when there are pullbacks, as long as you have enough time, for the most part, like, you're probably going to win. And having prop to kind of even that out is always a good
thing. I think arguably that's why dollar cost averaging is such an effective strategy, because it allows you to buy the tops, the in-betweens, and the bottoms, as long as you're consistently buying on some regular interval. And most people are in the United States with their paychecks every 2 weeks. And so a two-week interval for dollar cost averaging into the market is still an effective strategy and works very, very well over the long run. That said, we're not even going to get into the argument about whether that's the most effective portfolio. I'm just saying that you're going to make money over the long run if you invest in a portfolio of stocks for a long period of time. Can you beat that portfolio? There's a whole bunch of different ways to do that. Should you attempt to time the market? Not if you're the average person. You definitely need to know what you're doing. And I think the risk of managing a portfolio by yourself is the risk of not knowing what you're doing. Happens all the time. Like I remember having friends in the past that aren't very versed in the markets that just get excited about whatever the new trend is. And so they just start assembling a bunch of weed stocks because, the weed market was being legalized.
Right.
And they hoped that they would get some huge rise there, or they would pick one stock out of that group and put all their eggs into that one basket and it not play out for them. So it's tough. It's a tough game to play. There's a reason that money managers across the board don't beat the S&P 500. I think your best bet is just buy the market and hold as long as possible.
That's the thing I find to be so fascinating, that you have all these people looking for trends everywhere. I'm going to find the uranium trend. I want to find the gold trend. I want to find this trend. And you go, there is no trend stronger than the monetary and fiscal policy pumping money into the system. Like there's no bigger trend than that. And so if you're not exposed to that at least, and then doing the other narrative things as like an extra stuff, it's like, what are you doing? Why are you betting against all the central banks, all the governments? Why would you ever do that?
Right.
But the game changer for me, even knowing that didn't matter as much as when you talking with you, Mike, when it clicked in my head, the always long, sometimes short, which means you got to have a long-term view of being long, but the short-term view, like you're saying, trading intraday for if you could express the short side. That's like the way to go. And since then, I think I doubled my portfolio. And before that, I was just like, decimating it constantly.
Yeah, I feel like that was my one knowing what I know now, of course, would have changed my entire investing career in crypto, given that I was exposed to Bitcoin back in 2012, right? But hindsight is always 2020. So I try not to think too much about that, but the opportunity cost taught me a great lesson. And one of those lessons is it would have been smarter to hold Bitcoin over that long period of time. The belief is that you have to sell the tops and then buy at the bottom again, but that's really not the best strategy. The better strategy would be to figure out how to make money when it hits the top and retraces to some sort of bottom. Well, the options market in crypto didn't really form until I think roughly 2016. There were beginnings of an options market that really started to form there. The premiums were incredibly expensive, but it was a very inefficient market at the time. And I think even buying deep out of the money puts at that point would have been a more effective strategy than trying to sell Bitcoin at the top and then buy at the bottom again at a retrace. Oh, shoot. So this trade is turning against me. I got to get ready to nurse the exit here. So we're up against the electronic VWAP now. I just want to keep an eye on that one price point there. Tom, thanks again for this indicator. That has been super helpful. This one allows me to see the electronic VWAP on the regular trading hours chart. And it's this dotted blue line here. And I want to see when this candle closes, if we're going to close above VWAP. And if so, I'm going to go ahead and exit this position. It may pull back though. So I'm using this new Traders Post feature as well across my accounts. I'm going to go ahead and exit. All right, so unfortunately, there's a little bit of a loss. Price moved against me. On all the Apex accounts, that was a $330 loss. But then on some of the smaller accounts here, that it's only $236. Now, what's interesting is I have subscription setting here on my strategy. If I go to all my subscriptions here on the Apex accounts, I actually went into the position size and I'm using this new signal quantity multiplier. So when a signal comes in to buy 2 MNQ, I actually multiply that by 1.5 and it'll move the position size to 3 each time that signal comes in. I'm trying different scaling sizes on some of these accounts, just attempting to get a little more profit out of my signals. because my win rate has been so good, and I'm feeling like I'm managing risk pretty well. So I'm looking at those Apex accounts as my guiding principle, but like, or where I'm managing my risk, what's the drawdown of those accounts? Because obviously in the smaller accounts, I'm not losing as much. It's a slightly smaller position. All that said, it's been a really nice feature to use because it allows me to sort of quickly mathematically adjust the positions across different accounts. It's the same thing with the larger Tradeify 150,000 account. I actually have the the signal quantity multiplier set to 3 on this one because it's a much larger account at 150,000. So that's, if you're not using that feature, give that one a try. It's actually been really nice. Okay, well, that was a very bullish reversal. Let's take a look at
Amazon. Amazon's just absolutely ripping right now. Just straight vertical.
Is that what's rallying? They didn't report, did they?
I don't know, but it's just straight buy volume from the open.
I was going to say there weren't any earnings reports today that I was worried about. But Amazon was yesterday. Or wait, no, they're not even at all this week. It was Google and Tesla yesterday.
I mean, that PMI was. I never understand those numbers. I have a question for you, Mike.
Yes,
how do you rectify, like, when people are like, the advantage to prop firms is that you can scale across accounts, right?
Mm-hmm.
You can have 10 or 20 or whatever. So how do you, like, I've heard sometimes you will like flip back and forth between saying like, I made like $100 or like I made like $4,000 or whatever. To me, I don't know if I can handle mentally going like, oh my God, I lost $4,000 when really it was, $75 across accounts or whatever. So do you find yourself flipping back and forth about like mentally like referring to it as the amount of money that was in one account? When it's a win, is it you made $5,000, but when it's a loss, you only lost 75? Like, how does that work?
I look at the average P&L across all 27 accounts, or 25 that I can get the data for really quickly. So today was an average P&L of $350, but the max loss the max loss was 715 on the 150K account. And then the smallest loss I had was 234 on a few of those Tradeify accounts that I don't have the multiplier on for. So I just look at it from an average perspective, and I'm looking to move my profit goal here. I'll just show you guys. Let me show you my little tool that I custom built, which taps into the Tradeify APIs and attempts to sort of give me a report on all of my accounts simultaneously. Let's see. So I have to stop sharing this screen, and I'll share my. So this is a Jupyter notebook that I've written, which basically pulls down all of my accounts. And at the bottom here, I have this little tear sheet that I've written, which gives me a printout of all of the account level data. So the average P&L, the max P&L, the min P&L, the sum of P&L for the day. So overall, I lost $8,700 across all those accounts today. And I think those are the numbers that we see people post on Twitter. When they say I made 15 grand today, it's usually the sum of all the P&L for all their accounts, which doesn't really sound as impressive if you were to just look at one account. So just looking at one account today, you could say that I just lost $350. What I care about more than the P&L is effectively the overall profit target that I'm on with each account, but then more importantly, what's the MLL I have in each of those accounts? So the average max loss limit across these accounts, the total profit, and then where I am relative to the profit goal. That's what matters more to me. So I pay attention to that across the board, just making sure that I'm constantly managing the amount of loss that I have, or drawdown I have that in those accounts.
I only think of my accounts in terms of percentage points.
I might have to do the same thing. I'm interested in these new Tick Trader accounts because they're offering straight to funded accounts and they let you scale up to 10. And I might expand to include those accounts as well. The interesting thing about it, though, is they have some kind of point-based system, which is based on the percentage P&L of your account. So like on each trading day, I think you have to make at least 0.5%. So I might translate some of my earnings to percentage-based terms just to keep track of that as well. But it's fairly easy to do, obviously. Okay, where to weird open. We're in this weird range that I was talking about earlier where 23,400 is clearly resistance. We didn't post a higher high of the session, but we're still above VWAP now. So this is kind of a zone where I'm not really ready to trade again yet.
Right. Rarefied air.
I just want to, it almost starts to feel like, okay, is this the opening range then? This might be. I'm not really a huge believer in opening range trading. I know a lot of people are, where they wait for the opening range to form.
That's blasphemy. That's like saying you don't think ICT is real. Two guiding principles. That's like the guiding principles of everyone.
Don't get me in trouble with that.
Everyone can agree on opening ranges.
Those guys are aggressive, man. I support ICT. I support whatever approach works for you, my friends.
That's like saying like you don't believe in higher highs and lower lows.
Right.
Well, obviously I believe in that. Otherwise I don't believe in trend. But yeah, what I'm saying is that not every day has an opening range. Sometimes you'll get an open that just immediately confirms direction, and I don't want to miss out on those moves. I think we kind of had that, this day. So Tuesday was a fantastic trading open. This isn't, I mean, you might argue that this is the opening range, but this was one of those days where just the first two candles alone were enough to tell me that this was a bullish open, or excuse me, a bearish open. And I rode that one as long as possible.
Whoa, look at that.
Interesting. Well, shall we trade the orb then, just to keep this consistent?
So you'd have to buy the bounce at the bottom of the range, or if it breaks, then you sell.
Exactly. The latter of those two. So if we break below the orb, then I would sell.
Have you seen that it's like an opening range thing, but it's like the first 30-second candle or something. And I remember seeing it, and it's just like, what are you talking about? And then I went back. I mean, there's some truth to it of putting on the 30-second chart and looking at the first 30-second candle, and it's like wherever the same thing. It's pretty weird.
Yeah, I've seen some trading like that where some people trade even just the first two candles of the session, but they're trading the minis or a couple of lots in the minis, and they get in and out within seconds, and that's their whole trade for the day. What's gold doing? Oh, rallying from this gap. Interesting. It's been a hard one to watch here because it seems to be ranging in this 3,200 to 3,500 range, and it's been a little messy. Obviously much cleaner on the daily chart. Yeah, this is again where I'm just not quite a fan of orb. I really want to kind of see how price responds to VWAP here. And if this next candle closes below VWAP, I'm actually still ready to get into a position again. So Tom, have you considered moving over to the dark side and trading some of the stock index futures yet?
I just can't bring my heart into it. When I see what happens with crypto,
Crypto.
The only way I could switch is if I started
Just
failing.
futures, like futures. Is that what the
Any
question was?
asset, all these different assets trade so much differently than crypto. It's like
Mhm.
it almost feels like crypto feels like catching a soccer ball that's bouncing, and everything else feels like a football that's bouncing around. It's like I don't even understand how you guys catch it. How do you even know it's squirrely? It's going the other way. You guys will take a trade on this on the stream here, and I go, oh, I would have taken the complete opposite one.
Yeah, fair enough. I remember I think the guiding principle is always what's happening on the higher time frames, though. I'm interested in overall directionality on the 2-hour chart and overall support and resistance before I get into a position. And we've had a pretty good signal here that we're in somewhat of a bearish pullback, but this is noisy. In term this section here, this should tell us everything we need to know on the 5-minute chart here. Anytime I see price straddling across indicators like this is indication of chop right away. So it's a really hard area to trade, even on the 1-minute chart where I take my entries. It's hard to confirm whether you're going to see any direction out of this because buyers could just step out of anywhere. On the higher time frame, this is telling you that there's a good likelihood that it could be completely random here for a little while.
My issue with crypto, it's like my same issue with futures. So I can't handle the 24/7ness. Saturday, Sunday. It's just, you'll be up, you're like, oh, I'm a genius, and then it goes down, and then you're like, what am I doing? And like the time frames, and you're like looking at the weekly time frame, and you're like, oh god, I didn't even consider that. And you're like, what is crypto? It's just like you have these existential moments. It's just like, what am I even doing with my life? And it just never stops.
That's why when I'm
I can't really trade intraday crypto. I've done so much better just holding crypto portfolios. Like the top 30 market cap coins has been a more effective strategy than trying to swing trade on short-term basis.
Well, what happens for me here? So, like you were just saying there, Trevor. Yeah, I do have to, when I'm trading for Bitcoin, I have to trade the 1 minute, the 15 minute, the 2 hour, and the 1 day, and then I also have the week and the month in mind. But once the perfect setup happens, there would have been no better time to get in. There's no point where I go, oh, I should have gotten in early, like over here, this guy over here, this entry over here. There's no better entry than it. So I never have any FOMO. I never have anything like that, because once it bounces up from over here, I could suffer this entire drawdown without ever having to worry. And so once I'm up on my position, and then I take small trades during the day, to me, I feel like I'm trading part of the profit that I have on my long leverage position. You know what I mean? So I'm trading, if I'm up 300%, I'm just trading 100% of that profit. And even if I lose it, well, who cares if I'm losing that intraday? Oh, that's a dead cat bounce if I've ever seen one. No, that means it's a long. If I think it's short, that means you should go long.
No, I want to go long here. I'm looking at gold as a long here if it continues to post above VWAP. I like this potential for a gap fill, although I've not back tested the gap fills on gold. I don't know how often they close or fill the gap. Okay, interesting. So NQ's trying it again. I'm going to go ahead and just post right below this candle. I'll go ahead and continue the ride from there. So we're going to build another short here. Hello. There we go. That's the sound I want. And I think I'll even average into this a little bit further. It might pull back once more and test VWAP. So I'll average a little bit higher. Am I going to get wicked or what? Here we go. Come on. Oh, give me a break. What am I off by? I guess a full point. So I missed my second entry by a point there.
Oh. and now it drops 15% in 2
which
minutes.
is great. I'm back at break even now. I'm in profit. All right, great. So now let's watch the orb. We would set a second trade here, preparing to trade the sell-off from the orb breakout.
So is it a stop limit where you want it to break the bottom, and then when it retraces to the bottom of the thing, then you of the orb, then you get back in? Or do you enter the trade immediately upon the close below the orb?
I'm going to enter the trade immediately. Like this will be just a price trigger market order. So if we break below, it'll enter the position immediately. And then I'm going to hold that presumably through what I believe could be a trend from here. Looking at the 5-minute time frame, we're starting to get away from the moving averages, which is what I want to see, because trends tend to move away from their moving averages. That's really what we're looking for. And then that will give me some kind of a trend to follow here until I'm ready to close my position out. What I like here on the 2-hour time frame is that we're going to test that 23,300 level, which is this alert right here. So there's a couple things that have to happen for me to feel good about this trend. One is that it has to continue past this 23,300, but then we also need to test the weekly VWAP, and then there's some anchored VWAP lines that could be support as well. So I'm just going to watch it as we go down and see how price responds to those levels.
Yeah, that's what I have here too. That likely NASDAQ goes to 23,243.
23,243. Oh, that's somewhere in here. Interesting. What VWAP is that for you? The 23,243.
The daily. It's the, yesterday's close.
Oh, I see. Okay.
I just find that like price just constantly moves from previous VWAP to previous day VWAP to previous day VWAP. It just constantly happens.
It's a great indicator.
Yeah.
Aventura says that his strategy just entered a short. Good to know we've got some confluence there. Some confirmation of the right direction. I'll assume, Aventura, you make incredible sums of money. So if mine's short and you're saying you're short, then I must be doing well.
He's furiously typing, going, no, don't follow me.
It's like, don't prop me up. Please confirm, Aventura, if you're trading from your yacht. That's what I need to know. And also, when is my invite to your yacht?
He's on the roof of a Vanderbilt hotel.
In all seriousness, I do assume that many people are very good at what they do. So I assume that your strategy entering a short is likely a good signal. All right, so we kind of knew this was going to be a weird, potentially slow open, especially with how much chop was here. So there's still potential that I'm going to have to manage another loss on this.
It's very funny, Ventura. Wouldn't be working a job if I did.
Fair enough. I know that feeling, my friend. He says he's trading from his cubicle. I got it. I got you. I've been there. All right, one more test of VWAP here. We're actually coming back to where my original second entry was. I just got wicked again. That's it. I'm just going to go ahead and do it. Get me in. Jesus. All right, my confidence is still pretty high. I like this downtrend, the regression trend from that top candle above VWAP. We still have a Pearson's R of 0.89, so I'm just watching the continuation of this trend. I'll get out if we start to move away from this regression channel and above VWAP.
So wicks to you, me, if I see a wick like that, the 4 bars back, I go, oh, yeah, I go, I'm not getting that. We're reversing. That's why I'll take a long.
Yeah, and I think even ICT would teach this too. You know, we're already looking at what looks like a fair value gap and an inversion, but again, I tend to just focus on VWAP and price closes below or above. This is already feeling like a choppy day, so I could be very wrong on this, and this could be very much a good setup for an inversion to be long. The reason that this would be a failed day for me is really all this chop right here. I don't do well on choppy days, obviously. I trade trend days, so this is where my strategy starts to fall apart. But in order for me to stay consistent, I'm not going to change my rules based on, you know, other types of market strategies. I got to stick with the approach that works for me.
Interesting.
That's been a really hard hurdle for me as well. You know, I've been at this since day trading in general. I've been at it since 2017, 2016. And I used to listen to all kinds of feedback and advice. And I think that's what got me into trouble. I had to figure out what to sort of ignore and what to filter out and just listen to my own approach. Because if you can't trade everything. You know, you can't trade every single signal out there. And there's always a buyer on the other side of your sell and a seller on the other side of your buy. And their directionality and intent is completely different than yours. There's always usually a good reason to be long or short something at any given moment of time. So just got to stick with your own approach.
That's so true. Always a good reason to be long or short something. Put that on a t-shirt.
I feel like is that a new motto for Traders Post?
I love that. Yeah. Yeah. So for me, if I'm going to look at the NASDAQ,
yeah,
like to me, it's all my indicators are showing that we're headed towards the 23,240 because not only is that the previous day's daily level, we're below the currently developing VWAP. We have wicks responding, so seller pressure coming in every time the price goes up, and we have it's still bullish overall, but we're too far above the weekly level. So it just feels like everything I would say is to short this to get the bounce up and then clearing up at 23,250, going along then.
Copy that. Didn't want to interrupt you there, Tom, but I did set a scalp right below the orb. So I'm hoping for 15 points of movement on one NQ contract. And
what direction?
Short. So basically I layer my scalps on top of my short position. So I'm still short the contracts M and Q, 6 on most of the Apex accounts. And then I also have this one NQ short coupled with that. And I'm hoping that I can pick up those 15 points. I feel like I just barely got there.
Oh yeah, you explained last time you can't do two different directions.
You cannot go against each other. No, that would be considered hedging. So the NQ and the M and Qs are all in the same direction. That's perfectly acceptable. I just can't go beyond my max contract limit. Oof, this will be a tough one.
What an exciting first day back.
Yeah, no kidding.
It's right in the box. Back to the crypto thing. My only successful random crypto plays and stock plays have been when there was an event that people were all aware of, like Trump coin. I saw Trump coin the night that it was posted. Yeah. And that was just something you get in early and you're like, oh, this is how it is. You just holding. Those are cool. And that's when it's fun for 24/7. But randomly just, you know what? I think I'm going to buy Ethereum. That will take years off your life. But there are moments where collectively everyone, it'd be like if you could long the Coldplay big screen thing. It's just everyone's talking about it. This is it.
I feel like Tom's about to chime in with how the betting markets might provide that.
Oh my God, you totally know me. I'm
what AI would say.
Tom's
That's
like,
exactly
you
it.
can probably find that on Kalshi. Who's the next celebrity to be caught on the Coldplay screen? Or will another celebrity be caught on Coldplay within the next 3 weeks?
I just love the better markets for that sort of thing. Like, and you get more of those than the Trump coin stuff.
Yeah.
Right. The Trump coin, let's say you get in at the right time. Whatever. Some people made obscene amounts of money, but the average person, you hear it the night before, you hear it the morning of, maybe you make 5x, 10x. There are 5 to 10x trades on Polymarket
Sorry, that was a good fill, guys.
Look at that.
So I grabbed the scalp that gained me 15 points of profit on 1NQ, and we still have 6 M&Q short at the moment, all up 450 on each account. I love this screen right here. If you're familiar with the Traders Post dashboard, this is where I get to see all my accounts in profit simultaneously, with my 150K account up 810 at the moment.
We need confetti on that page. On page refresh, just ding, 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 ding.
If you're up on more like most of your accounts, we send off some confetti.
That's right. And if you're down, it says, "Don't worry, keep trying."
All right, so we broke that short-term EMA that I was worried about. So I have this indicator that I use, which is an EMA slope filter. I picked it up from another Twitter guy, Twitter. He's a systematic trader. I can't remember his username, but pretty simple signal. Essentially, it's looking for a crossover of the EMA and the slope of the EMA looking back 25 bars. And when that number is -15, it's one of the more reliable directional change indicators that they have. It's mostly for the daily chart, but I found that it's pretty effective on the 2-hour chart for me as well. And it almost hit that number yesterday and then bounced up. So I'm keeping an eye on this one on the 2-hour chart, especially as we start to pull back here. I would expect that if we start to hit lower lows, that's going to pull that slope down and start to signal the potential of a change in direction overall in the market, because we've been bullish for 108 trading days now. Somebody else posted something on Twitter yesterday saying that this is the longest we've been above the 20-day moving average on the S&P since the .com reversal.
Don't like hearing that.
This time it's different.
This time it's different. My favorite phrase.
All right, so now we're at the open of the last candle, the previous day.
Yeah, good call on that. I'm watching here because I'm starting to see there's a little bit of a bullish engulfing candle, and I think I might be taking profits here. We already grabbed the scalp, so we're in profit on that anyway. And that's it.
See, that's the part I can't do. I cannot close my winning position. I'd rather give it all back.
So I see this occasionally happen where the alerts and the log actually happens after the order gets fired with Tradeovate, which means the webhook URL got sent from TradingView first, and then the interface or the client side then updated everything from there. Yeah. So anyway, I got filled on all those positions. Let's do some math on where we landed today. So I'm going to run this in I'll run my little Jupyter notebook in the background. Basically just runs through all the accounts, gets all the data for them. So that's an average P&L on all the accounts of $312. The max P&L was $780. Minimum on the account was $266. And I still have plenty of drawdown available, and I'm about 45% of the way to my goal now. One of these accounts I have is a Tradeify account, the 150K account. I'm now at 85% of the way to goal. So I should actually be getting a payout on that one within the next couple of trading days, unless I take another trade today. This Tradeify 150 has to get to 159,000. So I'm almost there.
All you need is one big swing.
What's the payout? $2,000.
Well, the other thing is consistency. So if I go to the Tradeify dashboard here, I need a little better consistency on this account. I would assume that this trade, so that trade was still below my best day of 1,700. So I'll have to do the math on where that puts me.
What percentage consistency do you need?
20% on the S2F accounts. So it may require that I take one more trading day after that, and that should push me above the profit goal and below the consistency, and then I can request a payout.
I think Trevor was asking, what's the payout amount you can get from an account like this?
Good question. I haven't made it that far in my journey. I'll have to look through their logs. You know how it is with some of these firms. It's kind of hard to tell what their payout rules are and whether or not it actually qualifies. So I'll let you guys know. I'll tweet about it. It was a good little trading session.
This Twitter game has really increased. It's been like a lot of fun watching the journey that you're documenting. Really great stuff. Your tweets combined, I'm like, okay, it stops me in my tracks, and I don't normally. I'm not trying to say that your tweets before like didn't matter, but they didn't matter to me. But now they
they didn't matter at all. I promise, and they still don't. I'm not an influencer, but I'm trying. I'm getting out there, I'm putting myself out there. And I've had some decent feedback too. You know, obviously the goal of doing all of this was to showcase what we can do on Traders Post, but you know, in the process, if I can pick out some payouts on these accounts, I'm all for it. And I really enjoy trading futures. I've been at it for 3 years now. And oh man, it was tough. Live trading futures is a lot more difficult than prop firm trading in my mind. But prop firm trading has taught me a great deal about risk management because I've lost account over account over account. I think at this point, all in, I've lost over 20 something accounts. I think there's probably other people who've lost more than that. I know for sure farming futures has lost hundreds and hundreds of accounts. I know that's part of the game.
Those are just evals though, right?
That's what I'm saying. I've lost all kinds of evals at this point, and it's all sunk cost.
Get those numbers up. If they were
are those rookie
accounts,
numbers?
then I would be like, okay, that's crazy. Like when he's like, oh, I was up $10,000 across 5 Top Step Express, and I blew them all. I'm like, dude, that's wild. That's $500 or $750 just instantaneously.
Well, I mean, in my mind, it's like, if I'm going to sink thousands of dollars into these accounts, I need to see an asymmetric payoff from it, right? That's the whole point of doing this. When we first started talking about prop accounts, our whole idea behind it was it's an asymmetric play. You have fixed risk. It's just like an options contract. As long as you're doing well at your trading activity, then you're not just sinking the cost of the premium. There's a payback off of it, and that payback should be disproportionate to your cost. So this only works if you're not just constantly losing accounts and never getting to a payout. And there's been a little while here now where I started this little journey of mine with my first Top Step account almost a year ago now. I'm pretty sure it was last summer. And then I took a while. I didn't trade for a long time. And then I started adding, and then I started scaling. And then John and I figured out, hey, why don't we just support this as a feature? So I would say consistently, it's been since roughly February now. So I'm roughly 5 months into the journey trying to get to my first payout. And I've already burned through 20 or 30 accounts at this point. So I'm trying to think about it from an options payoff perspective. If I'm going to sink this much money into it and this much effort and time into it, it needs to have a very large disproportional payoff.
But also, I think it's important that first, I've gone around and around about the, just the logic and gamification of it all. For Top Step especially, it's just like, just get that the first payout is never going to be like amazing unless you're like one of these guys. So like if you can just get that first, if you can just get the first one, where you're like, oh, do I really want to take like $1,000 payout? Like this isn't anything.
I mean, in my mind,
then you get the first one, then it's like
some of
like
my initial
money.
cost. Yeah,
it's house money, and then all of a sudden you're like, oh shit, like this is free basically. So I mean, how many Express accounts have I had where I'll make $4,000 on that first day? And then I'm going, well, if I do $200 a day, they may like not like me anymore. So I got to go bigger, or I want to get to $10,000 and take when I could have just, 4 days later, it goes by pretty quickly. And you find yourself competing with these random Twitter people when really like that's when you talk to Ike later, he will hammer that home. He just does $200 a day across 5 accounts, and every one of his tweets, he's like, hey, I'm not putting up big numbers, but this is paying for my mortgage payment. This is paying for baby formula.
And for me, like the way I thought, the shift that I took because maybe the one part of my journey I should share here is that this is the longest I've ever kept accounts at this point. I've had these Apex accounts that I'm working on now for almost 65 days. I've gone through 2 renewals now. And that to me is actually a sign of success, because I've been managing risk very differently over the last couple of months than I was prior. Position sizes were too much. I was throwing random trades out. Even when I did throw a random trade, I would sometimes let them ride too far. I was violating all the rules that I know are true about risk management. So when I focused in and really dialed in on that process of just focusing on allowing each trade to be a potential loser and just managing that loss, that's when the account balances started to go up. And I've stayed into this game a lot longer, just focusing on the losses themselves. Now, when the winners play out, the one thing I'm still trying to tweak and get better at is when I have a winner, I got to hang on to that winner a little bit longer. I did really well with that yesterday, but I flubbed it on Tuesday. There was a really good short on Tuesday that I should have held a little bit longer. It was this one right here. So I wasn't sure where buyers were going to show up, and I think I got out right at the end of the gap fill, and I assumed that this was going to be a reversal, but clearly it's not a big enough candle to indicate a reversal. So I should have held this a lot farther until we got back to that support line, and that would have picked me up an extra to 100 points there. So it's little things like that where I'm still trying to iron out the kinks. Managing risk seems to be pretty good, but then riding those winners longer as well. My overall profit factor isn't anywhere near as good as I would hope it to be. They just updated their journal on Tradeify, so I can update this for you guys. Let me actually refresh it for today. Do they not have the refresh button anymore? They used to have a button you could push where you could resync it, but apparently that's not there. Anyway, I'm only at 53% win rate and 1.4 profit factor on the Tradeify accounts. This isn't really an accurate figure to my other accounts as well, but Tradeify is kind of a sample of all the accounts, so it's a pretty good indication. So while I did well on Tuesday, I should have done much better, and I did pretty well today so far, but and obviously called the bottom of that trade almost perfectly. But now it's pulling back again. To your point earlier, Tom, I think you were saying, what happens if it retraces against the orb? Are you going to exit that position? Here it is. It's retraced against the orb, and now it's pulling back again. It'd be interesting to take another short here, because it's like not a trade I would normally take. Anyway, my point of all of this is letting the winners go a little bit longer, letting that trend form. The one thing that's had me worried lately, especially since I like shorts more than longs, is that buyers just keep showing up out of nowhere. They often will show up exactly on the support lines that I'm anticipating, but then I read a lot of people did not see this bar happening yesterday. Right. This bullish candle at 10:54 Central was a big one for people, and those types of buying activity can sometimes be really surprising. So I think that's another thing that's causing me to pull my shorts pretty quickly, because I just expect buyers are just going to sneak in at some point.
Right. I see. Well, I'm looking forward to this expanding to the point where I want to see people, not only are they daisy chaining the prop firm accounts together, but that they're also sending some of those signals off to crypto positions, to leverage ETFs, to long term, so that the buying of the dip that they're doing, like there's something about staring at the chart and then you're watching it as it's doing this massive 7 sigma move, and you go, wait a second, not only should I be trading this, I should be buying some NVIDIA. Now I should be buying something else for my accounts. And it spirals, like the same trade can spiral out and do different things. And I just love the idea that you're doing the day trading, but some of those signals are also useful for swing trading, for long term, for 1 month, 3 month trades. I want to see that spread out all across. And you go into Traders Post and you get an idea of, hey, this thing spread out all across here. I'm more of a healthier trader and investor over time because I'm doing the trading.
Yeah. No, I think that's the right way to look at it. Like, we should be trying to improve in all areas of our approach. Of course, for many people, just having one approach is still a very successful and viable path, but you still got to dial in all the aspects of how that approach works and how to get the most out of it. I've definitely been pretty hyper focused on the prop firm trading side of things, which has had me ignoring my long-term portfolios, which is probably a good thing right now because it's been volatile, but everything's up since April 9th. So I'm happy. I'm good with that. There's a couple positions that have pulled back farther than I expected. I just checked my United Healthcare position, and that one pulled back against me, unfortunately. So there might be a good buying opportunity in there.
You think you're going to be taking any more trades for the rest of the session?
I'm not sure. We're still below VWAP. I see this bullish trend forming, and I'd like to see how it responds to my original exit from the previous trade. But it could take a while for this to form. Again, it's still looking, even though we started to form a trend here, it's still a little choppy, and it's not quite my session. So I would want to see it break a couple of support levels and maybe scalp for the rest of the session. Maybe I have one or two more scalp trades, but overall, no, I don't think there's a very strong signal. Volume also really kind of came down. You can kind of see these candles got smaller and smaller as the session went on. ATR is starting to fall back. So I think the move of the day is done, but we'll see. I think we could probably call it here if you guys are ready to wrap it up. I'm kind of rambling at this point.
Was there was there anything update from Trump visiting the Federal Reserve today? I know that maybe that
he visited the Federal Reserve.
Yeah, I read about that earlier.
I feel like maybe that could be a thing where people are just like waiting for something bad to happen or good to happen, or who knows.
Yeah,
we had lunch. We're besties. Let's go.
Yeah, what time is that scheduled for?
I thought it was maybe already happened. Trump.
Didn't Powell say? No, sorry. Didn't Trump say that Powell's not going to be there 8 months from now? He was a reporter talked to him and he's like, "Okay, I'm going to get this guy out." I don't know. All I care about all that is that no matter what party we're looking at,
four o'clock Eastern, of course.
Okay, so right at the close of
at the close.
We'll do it 7
it makes it very unhelpful.
8:01 at night. He'll be like,
he's gonna hang him at 4 p.m. All right.
I mean, technically, you've got another 15 minutes of trading time there, right at 4 p.m. for prop accounts before they'll liquidate you.
There was a guy in the Discord that I was in that would do that for QQQ during what's it called, earnings plays. He would do QQQ at 4 o'clock, and now everyone typically reports a little bit later, I think, to avoid that. But yeah, people always forget that SPY, QQQ, XSP, I believe, still does from 4 to 4:15.
Yep.
So you can catch those moves.
Session there, and I have noticed that as well. The earnings reports will sometimes come out at 4:08 or 4:12, like several minutes after the market has closed, to try to limit that activity, which makes sense. Now, what I find interesting about that is that there's two things that are now about to happen in the market that I think are going to have a fundamental impact on price action and probably introduce like much needed and welcome volatility in my mind. What are we at today for the VIX? 14. Yeah, we need a little volatility in this market in order to take bigger trades. The VIX is so low right now. The first change that the SEC is considering is a reduction of the pattern day trader rule from 25,000 down to 2,000.
Yes,
that's a big one.
Oh my god,
that's going to open up a whole sea of people who can now day trade in a margin account. Because they don't have originally they didn't have the required capital to do so. So I'm very interested to see how that's going to impact markets. But then the second change that they are likely to make is 24/7 trading among a lot of instruments. Robinhood has already started to explore this. I think you can 24/7 trade on SPY and a number of other ETFs. But if we continue down this path of 24/7 stock trading, I think that's going to eliminate some of this control that companies and even the current administration has over trying to release information at specific times, targeting the ability to reduce volatility. So if we go 24/7 on this, it's like now you can't time the market anymore.
And what are you going to do? Like, how are you going to not trade? Like, that to me is like it's like legalizing cannabis. It's sort of like it's going to be everywhere now, and no one's going to have the excuse. They're not going to be able to say, "Well, I was at work." Like, no, there's the nightly session, and
Yeah.
you spent your time watching Netflix? Well, I made $3,000 trading.
I
What were you doing?
lost 10 accounts when you were enjoying your night. It would just be not like, can we just make it where you can, I don't want to open anything. Can I just close options at 8 a.m. or whatever? Those earnings plays where you're like, as long as it holds, I made $1 million. And then by the time the market opens, it's down, $10.
That's market makers for you.
I think it'll be interesting. Market makers are going to love it. That just adds a whole new time component to their entire profit engine. Right now, there's even more trading activity occurring nearly 24/7. They can fill they generate even more money from payment for order flow. I find that
I know that they say the crypto market is open 24/7, but the onboarding for crypto to trade is crazy. The regular person doesn't want to do that.
Right.
But for stocks, futures?
It's a big market, and it's technically a bigger market. So, especially in when it comes to U.S. citizens, so it could be pretty interesting. The PDT one is really interesting to me, though. I'm very curious how many new account openings are going to occur because the capital requirements are so much lower now for people to day trade, and it's already we're already on this growth curve in terms of day trading activity now since 2020. Where retail has just gotten significantly involved in markets now than ever before. So are we going to see more GME swings? Are we going to see more meme stock trading, more faith-based, or sort of not faith-based? That's the wrong phrase. I think I mean belief-based trading, right? Where
I bet on God. You're
placing your trades on the companies you believe in, not based on any type of fundamental analysis or technical analysis, and that can really swing prices in very interesting ways.
Well, think of all the people who started doing DoorDash, Uber, whatever it is, like the side money plays. More and more, I think, say what you will, people are going to have to find other ways of making money, and the markets they're going to start realizing that, wait, I do have some sort of edge or understanding about this type of market, and I didn't realize I could use this instrument in order to trade it. And wait, I am actually making a little bit more money on the side. It's not that much different than figuring out how to, sell on Etsy or to do something on Fiverr or whatever. Like, it's the same sort of thing. You're learning a skill, learning where your limitations are, and then executing it. Except here, you could do it anywhere. You can do it from your freaking phone, sitting on the couch. So I don't see how we won't get like an order of magnitude of people coming into the markets to participate.
And I'm happy to support every single one of them. I hope they check out Traders Post and what we have to offer. We can support all kinds of approaches.
Absolutely. Well, you chose the bottom right there.
Yep. Yeah, I think we got confirmation there once we had that second candle, and that's exactly where I exited. Interestingly, it retraced once more, and then there was a huge bullish engulfing candle, but ATR fell. Price got a little slow here. I would expect if there's any type of continuation of this trend, that there'd be one more bullish candle from here that would retest VWAP and then push in this continued direction. Otherwise, if we're going to reverse out of here, we need to see a little bit bigger of a bearish candle and a breakout of this regression trend for me to get interested again. So it's going to be a while before I take another trade, if I take one at all today. I think today was a pretty good overall profit day. Not a huge one, but we've got plenty of other things to do. I've got back-to-back meetings all day, so and I don't trade well when I'm distracted.
Awesome. All right, so we'll wrap it up there. We're going to be back next Tuesday for more Price Action Live. Join us later on today for Blueprint and Friday for After Hours. But until then, as always, we wish you guys happy trading.
Just curious, Tom, before we sign off, what do you have for Blueprint today?
I was torn between two things. One, do a top 3 list of new indicators for 2025 that I think are new on the market and interesting. Mm-hmm. But then I did a walkthrough with TrendSpider earlier this week, and they showed how you can import Google Sheets data within TrendSpider.
Yes. Okay. Cool.
So I was like, whoa, that I did not know you can do that. And even when I was speaking to the rep, they didn't really seem to understand like just how that's like request.seed, but instead of for TradingView, but instead of having to push information to like a GitHub repo and then import that in some complicated way. You just have Google Sheets and you connect it with the API. So I was like, I would love to test that out and see what
would you be pulling in from Google Sheets? Price
I've always
levels
wanted
or something?
Well, just stuff like if you wanted to populate any type of sentiment data, if you wanted to do, sometimes there are
third-party resources, Quandl data. You can generate your own indicators, like stuff that you couldn't do in PineScript. You could generate machine learning scores off of pricing data that you can't get into, TradingView or TrendSpider. When Tom and I first talked about, we were talking about generating. What was it, Tom? We were talking about making a daily list of some kind of sentiment indicator, and we were going to publish it to GitHub and then use request.seed to pull it in.
Well, initially I wanted the implied volatility, like the Greeks for.
Oh, that's right. We were going to do options data. Yeah. Okay.
But so Quandl was like, I was using that all the time. Even it was integrated into TradingView, so you could just like put in the code for the data and pull it in. But then they got bought out by NASDAQ, and then you couldn't use that anymore. We have a subset of the information in TradingView, but not everything that you can use before. But then they had all these premium data that you couldn't do anything with.
Right.
The idea that I could actually populate my own sheet and do that, or even if it's, let's say, I want to populate my trade history. Well, I could just input that into a CSV and then show that on the chart. Like, just there's all kinds of interesting things I think we can do. Now, I don't know if we can do it on lower time frame. I think it's only end of day stuff. But
really? On TrendSpider?
I think so. I'm not certain.
I guess that's not a bad thing. You could still run daily strategies that way. That's pretty interesting.
Yeah, I didn't go through the documentation yet. Only did a cursory look, but anyways, that's what I'm toying with. I haven't decided yet.
I'm definitely curious about either one of those. The request dot what do they call it on TrendSpider?
The feature?
What? Yeah.
No, sorry. It's request.seed is the one from TradingView.
Yeah.
That they deprecated. They just call it API connection. It's just
interesting.
API
Okay.
integration.
So you can really just sort of
Polygon, a bunch of other APIs. Yeah.
I think that's the interesting thing here, right? Being able to incorporate alternative pricing data or alternative API data, whether it's sentiment or pricing or some kind of indicator, that's super compelling to me.
Yeah, and they have TrendSpider has an AI model integrated, like for LLM, within their editor. So I think you could even code the JavaScript indicators and connections and all that now using a ChatGPT but instead of copying and pasting from abroad, it's within their interface. I didn't even know that was there. So they've just added a bunch of features lately that I was just like, okay, this is pretty cool. This is really upgraded.
Did you ever play around with their machine learning stuff after the first time we checked it out?
Yes, but it was the rules that are being generated are in a sense non-deterministic. You can't tell why it took that trade. Whereas the new version, the AI will generate the code for you, and then you can just go from there. But it's not using the same AI strategy builder that they had before. Like it's a separate thing. So I didn't like that previous one that they had. It was just too hit or miss. It was like, okay, it's taking the trade. I can't tell why. It's just the LM that's decided to do it.
Fair enough. I would distinguish those a little bit. I think the AI builder was a way to help you write the code for a deterministic strategy that just is a rules-based strategy. But then they had that machine learning library, which I would not call AI. I try to distinguish between the two a little bit. The machine learning library actually lets you get pricing data and then build some kind of a regression-based or classification model off of that data, right?
Yeah, but they call it AI Strategy Lab, like the tab.
Right, of course. Yeah, that makes sense. Got to use the AI buzzword. You can't just call it machine learning. Everyone's like, machine learning? What is this, 1996?
Right.
Excellent. All right, guys. Well, let's sign off from here, and we'll see you all on Blueprint today and for After Hours tomorrow.